Hi, let's take a look at what the market's currently presenting, what's the state of the markets right now, and how to plan tomorrow's trade. This is Bank Nifty, and we're looking at how Bank Nifty behaved whenever it touched a new high or an all-time high. So in this run, if you see in 2017, market made a high here around 27,000, and then there was a dip. Next time when the market was about to break this resistance here, there was quite a struggle because by the time market was about to break this previous high, RSI was almost sitting at 80, 81. Usually when the RSI gets overextended, these breakouts usually do not sustain. Let's take a couple of examples like this. See, before breaking this resistance convincingly, it struggled there, maybe a couple of days of sideways action, then a dip because RSI was overextended, then this RSI was cooled off, and then in the next attempt, it was able to clear the previous resistance very convincingly or comfortably. Because when this was happening, RSI was around 65, 66. Again, after this breakout, market made a new high here, around 31,500. Again, if you see, to break this resistance, whenever after this kind of a dip and then a rally, a V-shaped recovery, by the time market approached the previous resistance here, RSI was almost sitting at 75, 76. Again, it was unable to break out. Even though the breakout happened, it was struggling around these areas. And then there was a sudden dip. This was a COVID time. Now let's take, so this will be the high. This will be the high pre-COVID. Sorry, around pre-COVID, right? And now, was this high, the red line that I have drawn is a high. Was it broken in one go? No. There was a rally, some kind of a sideways action, struggle there, a dip. And when this dip happened, RSI cooled off from 80 levels all the way towards 40 levels. And the next move, there was a breakout. So now after a breakout, this is the high that market made. The next high was here. And now was it high broken very easily? No, there was a couple of days of struggle and then a breakout. Now where are we sitting? Next, here it was. So this was the high market made. And the next time market approached the same resistance, it was not a breakout because RSI was showing some kind of a divergence. So this cool off was very much necessary for a easy breakout like this. That means whenever market approaches a certain resistance, there is some kind of a struggle there. Now where are we sitting? We are back to a all-time high like that. Now when we approach a all-time high, RSI is showing some kind of a divergence. RSI sitting around 73, 74 levels. Now, following the pattern of last couple of years, what I see is, even if there is a breakout here, even if the breakout here tomorrow or day after, there could be some kind of a struggle, maybe a couple of days of sideways action is very much necessary to cool off this RSI to a manageable level before a very convincing breakout. So if I take any long positions here around this area, it could give a breakout, but what is the probability? We looked at a couple of examples in the last 3, 4 years or 5 years or so. Every time market has approached the previous high, see even a smallest high like this. This was the high. Look at this, there was about 10 days of consolidation before a breakout. So every time market is approaching a certain high like this, see this was a high. There was certain consolidation before a breakout. This was the next high. And now around that high, there was a consolidation and then a dip so that the RSI is cooled off because there was a divergence that was setting up there. So basically what I'm trying to convey is, this could be a breakout, but the problem here is the risk reward is absolutely not in favor. And looking at what has happened, so there it is better. It is better to have 1 or 2 days or maybe a couple of days of consolidation before a very convincing breakout. So I would go long on dips, but immediately longs would be definitely having a very poor risk reward given the condition of divergence on RSI and testing the all-time high. So where is the best location to take a long position? Let me drop down to an hourly chart. Where was the resistance area? This was the resistance area. So for me, this would be the best location to take longs. Where was this? Where is this? It's around 43,600 levels. Or a good, even better location is around 43,000, these levels, around 43,000 levels, 43,800. So any dips to 43,600 or 43,200 should definitely be a good location for me to take long. Now, given the market scenario, testing an all-time high and hourly chart, RSI sitting at 75, 76 plus, this would offer a very poor risk reward to take fresh longs here. So better to wait for dips towards 43,600 or 43,000 for any good buying chances with a good risk to reward ratio. Now let's quickly take a look at Nifty charts. Nifty daily chart, we are still quite a distance away from all-time high. The all-time high is around 18,750, 800 levels. So we are not there yet. But nonetheless, price, if you take a look at the price, Nifty would be little better compared to Bank Nifty. Look at this price is trading above short-term moving average, and short-term moving average and long-term moving average. There was a golden crossover a couple of days back. That means the market is still bullish. So every dip, the smallest dip, markets are giving a bounce. But the only concern for me is a small divergence that is happening in the RSI levels. Right? Now, if I take a look at the hourly chart, so basically Nifty has a better risk to reward compared to Bank Nifty. Nifty, Bank Nifty, both are bullish, but in with respect to what do you call risk reward, Bank Nifty is little risky right now. Nifty is okay. Let me take a look at hourly chart. Buy on dips is absolutely fantastic. In the last couple of days, see, this is a long-term moving average, the orange line or a red line. So every time there was a dip to this red line, it was bounced, it was bought. Around this long-term moving average, there was a bounce. Few days back or 2 days back, there was a dip to this long-term moving average. Again, there was a bounce. Now, if you buy here, it is too far away from the, from this long-term moving average. It covers a distance. After covering a distance, there is a dip. It covers a distance. Now it has covered a distance. Now it is better to wait for the dips to this long-term moving average. And the level where it is better to take a long position is around 18,300 levels. So 18,300 levels seems to be pretty good area to assume longs in Nifty. When it comes to Bank Nifty, 43,600 or 43,000 is a very good location to take longs. This is what technical charts are telling us. Having said this, let's quickly take a look at the data. What data we had today or last couple of days. So this is today's data on Nifty 15th. Highest OI bearish, where the bearish OI are the highest call open interest. This was at 18,300. Today, there was a shift towards 18,500. So options data suggests that 18,500 is where the highest call open interest is, and that should offer a resistance in the next couple of days or for this at least this weekly expiry. Highest OI bullish, meaning where the maximum put rating happened in this weekly expiry. It was sitting at 18,200. Now there was a shift towards 18,300. So option data is suggesting that 18,300 would be a support. So, and see, look at the shift. So the put OI shifted from 200 to 300, upward shift, and highest bearish OI, which was sitting at 300, shifted to 18,500. So this shift is in favor of bulls. Now, what is the range? 18,300 becomes a support area where 90,000 odd contracts are sitting, and 18,500 becomes a resistance area where about 67 lakhs are sitting. So what is the technical chart telling us at the same time? Support, this long-term moving average support is around 18,300, right? 18,300. So technically also the support is around 18,300. Data-wise also support is 18,300. So 18,300 should be a very strong stop loss. Or if you've not taken a long position already, that means 18,300 should be a very good location to assume long positions as far as the data is concerned. So data shift is comfortably in favor of bulls. So today, there was about 141% increase in the open interest on the bullish side, whereas on the bearish side, hardly 64%. That means the put rating is more than double than the call rating. Or the bullish OI is about 141% and the bearish OI is hardly 64%. That means there is certainly the data is in favor of bullishness. Where was the maximum amount of rating on the bullish side happened? It was 18,400 puts, followed by 18,350. That means 18,400 and 350 seems to be a very good support for market tomorrow. Long term or probably for this expiry, good support is 18,300. For tomorrow, for Tuesday, looking at 18,400 350. That means between this 400 to 300 levels, there should be some bounce back if at all there is a dip. On the call side at 18,300, where the highest call open interest was there, from this data we'll be looking at, there was an unwinding from the bearishness sitting at 18,300 strike. That means the call letters are running away from 18,300. That means they are pretty sure that they will not be able to contain the market below 18,300. So the data looks positive, technical looks positive. For tomorrow, which is Tuesday, immediately the support should be around 400. If 400 is not comfortably acting as support, should 300 from weekly expiry data and technicals both suggest the 81,300 is a very important support. 500 is the next resistance where market might face some challenges in terms of Nifty. If I take a look at Bank Nifty, the highest open interest OI on the bearish side was sitting at 43,500, which got shifted to 44,000 today. We are around 44,000 now. Highest OI bullish, which was sitting at 43,500, is still sitting at 43,500. So there was no shift on the put side, but the call side, there was a shift. There was a straddle that was written. 43,500 call and 43,500 put was written. Whereas 43,500 put is retained, but 43,500 call has been moved to 44,000. Again, the shift in the call side seems to be in favor of bulls. Right? Now, if I take a look at the data, so about 82% addition is happening on the put side, whereas hardly 23-24% addition is happening on the bearish side. That means this market is looking at bullishness. So 43,800, there was unwinding in the calls. 43,700, there was unwinding in the calls. So the unwinding is happening in the call side. So data looks pretty positive as I see from the options data as well. Now, if I take a look at what's happening in the last couple of days in Nifty and Bank Nifty. Let me take a look at Nifty now and see what's happening. Nifty in the last couple of days, if you see, this is the red one is the cumulative futures open interest. You see what is happening is there has been a consistent increase in the futures open interest built up in the last, right from 28th of April. 20th of April, meaning this May month expiry. So May expiry started somewhere on 28th. Yes. So for the entire expiry, for this May month expiry, there is a clean increase in the open interest on the futures side. It's a cumulative futures open interest. Now, as the open interest is building up, what is happening in the price? Price also going up. That means there has been a long build-up that is happening in the Nifty for the entire May series in the futures side. Option side, monthly options, if you look at the PCR is sitting at 1.25, which is again a bullish stand. Anything above 1.2 is a bullish outcome. PCR weekly is also rising. So basically, the entire May month, there has been a long build-up in Nifty. In the future segment, PCR is bullish above 1.2, 1.25. If I look at Bank Nifty weekly, there has been see this green one is a PCR options data, PCR, put call ratio. There has been a steady increase in PCR, both on weekly and monthly. Current PCR is around 1.13 for the weekly and 1.14 for the monthly. So again, more or less on the bullish side. There is nothing substantial evidence on the futures COI on the Bank Nifty for this expiry. But nonetheless, if I compare 1st of April, 20th April till date, there has been a slight improvement in the futures open interest build up on the Bank Nifty, but options are very significant in the Bank Nifty side for the entire May month expiry. So looking at this structure, Nifty, Bank Nifty, both are bullish. Bank Nifty is sitting at an all-time high, may have some struggle or not struggle. Yeah, it could be struggle, and also risk reward doesn't favor any fresh longs here. I would insist that I would buy around 43,500 or 43,000 in terms of Nifty, 18,300 based on the data and technical charts on the lower time frame suggests 18,300 seems to be a very good location and offers a very good risk reward for a long position. So as of now, the charts and data suggest that longs are better. Stop losses for all these long trades should be below 18,300 and 43,000. Right. So having said this, let's see what's the market going to offer tomorrow, Tuesday, Wednesday, and before the expiry happens. Anyways, thank you so much.